Hello, and welcome to your CRU Weekly Ferroalloy Roundup. I'm Tom Butchich, and today I'm joined with Greg Smart and Estelle Tran to give us a brief outlook on the ferrosilicon price development. Greg, take it away.
Thanks, Tom. Yeah, to start off with, just talking about the European market, as you can see from the graph here, we've actually seen weakness all this year, really, coming in from January. But the price level has recently come off a little bit more dramatically for producers because it's sort of come down on the low end below the sort of €1,000 level, which puts a lot of producers under pressure. So we've actually seen two drops this month. We saw it drop in mid-May to 985 at the low end and 1040 at the top end. And it's recently at the end of the month just dropped again to 985 to 1,030 euros. So this sort of fall in prices can be attributed to sort of weaker downstream demand. We've seen year-on-year lower stainless steel growth. We've also seen more spot material available in the market, so there's a sort of oversupply situation, which seems to have also been sort of had some impact from increasing imports from Asia as well. So all of these things have sort of combined into sort of one thing to put sort of pressure on the prices. So as I said at the beginning of this podcast, we've actually seen the price now get to a point where producers are struggling. And at the beginning of the month, we had an announcement from Elkem that they plan to temporarily reduce ferrosilicon production at their plant in Iceland. The company said that it will idle one furnace from June, and that further capacity adjustments might be considered depending on how the market develops. Elkem stated it was a price sensitive issue. They've also noted increasing imports from Asia, and they've also said that EU prices are now lower than local prices in Asia. So it's sort of quite a dramatic situation. Secondly, the producer Ferroglobe has announced some production cuts, although they've cited them to be a maintenance and routine. However, they are going to be implemented at the same period in June. So they will be idling one furnace in France and a furnace in South Africa. And the company said that it will further review its operations in South Africa and France over the second half of this year. So that's the sort of situation at the moment. But obviously, part of the slide in prices has been demand. We've seen a sort of slowdown in the economies in Western Europe. Automotive in particular is struggling. We've seen weaker production rates. German car production is down. German car exports are down year on year for the first 4 months of this year. It's sort of becoming sort of the perfect storm, really, and prices are suffering.
Yeah, I mean, as you said quite rightly, with this whole news with Nissan and Renault looking to possibly merge, it just shows that downstream users are struggling. And some of your car production stats earlier in the week, it shows that globally, downstream demand is definitely taking a hit.
Yeah, and I mean, added to this as well, as we noted at our recent Ferroalloys conference, where we met a lot of the large producers, steel mills, traders, the whole market dynamic. A lot of the buyers were saying that they just haven't got any spot demand at the moment. They're taking their minimum requirements on a contractual basis, and in some cases they're trying to negotiate rollovers so they can take their obligations a month later. So there really is just a real lack of spot demand in the market at the moment. And as we move into the third quarter, seasonally slower, it doesn't really bode well for any increase in prices, shall we say.
Yeah, as you said, if Q2 is supposed to be the best quarter out of the year historically, and if prices are on average been about 1,020 for the 3 months, what does it mean for Q3 when, as you said, historically it is always lower? Should we expect to see a dramatic shift downwards, or with the cuts that you mentioned from these producers, should we expect maybe in 3 months' time to see maybe some support on prices to stop falling? So
Well, I guess that's what we would expect to see. And if there are more production cut back announcements, then I guess it will have a bigger impact. So it's something to bear in mind, and we'll just have to watch the situation. But I don't know what's happening in the US market.
Yeah, Estelle, how are things happening over there? Similar developments from your side?
Well, not exactly in the story of like major cuts, but for sure we've seen some drops in the U.S. market. Ferroalloy prices in the U.S. are notoriously stickier than those in Europe and other markets. And in the ferrosilicon market, you can see from this graph that it tends to take larger steps down. Consumers increased their reliance on contracts for their 2019 ferrosilicon purchases, which has shrunk in the spot market. And as a result, there are long periods of stability in the U.S. ferrosilicon market, and when prices fall, they are often playing catch up. So on Tuesday, we lowered the U.S. ferrosilicon price to a range of 85 to 93 cents per pound ex-warehouse, and that low came down 5 cents. So that's a pretty significant drop in a day. So views are mixed about whether prices are going to come down further. Some sources have said that Brazilian producers have resisted lowering their prices, and traders are reluctant to sell to the U.S. market unless they can book those orders back to back. However, we're still seeing ex-Baltimore prices for Brazilian material throughout the 70s on a cents per pound basis, and we're hearing consistent intertrade deals below 80 cents. So the flood of lower-priced imports coincides also with the slowing demand for steel in the U.S., as generally prices for sheet steel in particular and other products have been coming down this year amid lower demand from the auto sector and slowing construction demand. So yeah, it is kind of a similar story where we have excess supply and lower demand in the U.S. market. Any further questions?
Yeah, I mean, just wanted to say, moving forward, I mean, what are you expecting what are you expecting to happen in the US market? Should you expect any further potential downswings on price from your side, or?
Yeah, well, after Tuesday's reset, I'm not sure if there are any major drops left. As you can see, there's still spread, but it has gotten, closer, between the U.S. and Europe. But there's still room for further declines as there are costs, for Brazilian material and material from Malaysia, elsewhere, that are, landing, in the 70s. So it's definitely a possibility. The spot market has been relatively quiet lately, so we haven't had as many numbers to test the market from the consumer side.
Yeah, I guess coming up to the quarterly contract time and H2 time, we probably might expect to see maybe some further developments there. So I guess
Right.
we'll keep our eyes open and see how things develop. But no, thanks very much, guys. It's a detailed review, and let's see how things will look like moving forward. So thanks everyone for tuning in for your CRU Weekly Ferroalloys Roundup. Be sure to tune in next week, and let's see where things go. Thanks a lot.
Thanks.
Thank you.